So Visa has been identified as one of the highest quality companies and stocks in the stock market today. There's a reason that it trades at nearly a 30 PE ratio. Visa is currently one of the core holdings in my long-term dividend growth focused portfolio. Its business qualities, fundamentals, and financials are some of the best that I've ever seen. And today I'm going to be sharing why I believe that Visa stock can hit $300. I don't believe in making short-term predictions of where a stock price will go, but I know for a fact that Visa is one of the highest quality companies in the world. As long as they continue doing what they're doing with their business, I know that it will go above $300 over the long term. The only thing better than Visa stock and their financials, though, is of course the Dividend stocks, not drugs merchandise. Go check it out if you haven't already. It's the best looking merchandise in the dividend community. Thank you, and of course, roll the intro.
Hello, I like money.
Now, recently, as an investor, I've actually changed my opinion on something, and that is buying stocks at all-time highs. I found that it really doesn't matter if a stock is trading at an all-time high or not. In fact, it can be an indicator of the quality of the business that it can be. I remember when people weren't going to buy Visa at $215 because it was trading at all-time highs, and look where it's at now. I honestly think if we continue to kind of stay in this market, not really go up, not really go down, Visa will only continue to go higher as a stock and as a company. People already know it's one of the best businesses in the world. The most important metric to look for in a business when you're looking at their financials is by far the free cash flow. This is an indicator if the business is actually making money or not, unlike revenue. But looking at Visa's free cash flow, it is impeccable growth. Visa's 3-year growth rate on the free cash flow is 27.75%. Their 5-year growth rate is 12.09%, and their 10-year free cash flow growth rate is 25.5%. That is absolutely insane free cash flow growth. Now, taking a look at Visa's business model, how do they actually obtain this kind of free cash flow growth? So Visa is essentially a payment processing network, meaning that they have pricing power over the fees that basically businesses and customers use throughout that network. MasterCard and Visa are by far the two largest payment processing networks, making them a duopoly. People don't really have a bunch of a choice between those two businesses. Now, is Visa year over year always going to have 25% free cash flow growth? Not likely. But if they can maintain a 5 to 10 to 15% free cash flow growth rate, which I think is completely doable and even conservative for them at times, I think they'll absolutely be a compounder. Now, unfortunately, it seems that everybody knows now that Visa is that compounder kind of a company, and it's unfortunately been trading up around 15% from its lows at 220 earlier in October. But people are still afraid to buy the stock because it's at all-time highs. But I'm here to show you why it may be a good time to still buy Visa, even though it's trading at all-time highs. I think just because the stock is trading at an all-time high doesn't mean that it's overvalued. A new metric at dividenddata.com is the price ratios and other ratios section of the stock analyzer tool. It basically allows you to really look at valuation more in-depthly and look at historicals on that. So once again, if you want to check out the investing software that I'm using, please use the link in the description. I get a big portion of that sale. Greatly helps the channel, and I'll even invest in Visa if you tell me you came from this video. But looking at Visa's price to earnings chart, you could see even when the stock was trading in the 190s, it was at a higher PE ratio than what it's at today. Since Visa has consistently and aggressively grown their earnings, their PE has remained the same, if not gone down. This is just a sign of an amazing business. The same can be said with Visa's price to free cash flow, which is another amazing metric to look at when it comes to their valuation. And actually looking at this now, it has made me even more compelled to possibly add to my Visa position today. And it's just more reaffirmation that the stock is not overvalued because it's at an all-time high. People were saying that it was overvalued at $210, $220, and look where they're at now. The same could be said with people buying Costco at $500, now it's near $700, Microsoft at $300, and now it's at $400. Obviously, you do want to pay a premium if it's an amazing business, but you also need to look at if it's trading at an all-time high, it doesn't automatically mean that it's an overvalued stock. You really got to do your due diligence here. On this channel, you will often catch me saying dividends are the result of a company's free cash flow growth, management, etc. This is a great example here with Visa. Visa's 3-year dividend growth rate is 17.57%, their 5-year dividend growth rate is 19.88%, and their 10-year dividend growth rate is 17.92%. Recently, just this fall, they had a dividend increase of 15.56%. That's like getting a 15.56% raise at work. You just don't get that. That's the power of dividend growth focused investing. But with all these dividend increases, you may be asking yourself, is this sustainable? Are they going to continue increasing the dividend like this? Heck, is their payout ratio even getting high? Is the dividend going to eventually be unsustainable with these crazy dividend hikes that they're doing? Let's take a look. So I think when it comes to the dividend sustainability, the best metric to look at by far is the payout ratios. Now there are two different types of payout ratios, which is the EPS payout ratio based off of net income and the free cash flow payout ratio. Now me personally, I prefer looking at the free cash flow payout ratios. That's a more direct result of kind of their earning power. And we can see currently Visa's free cash flow payout ratio is 19.04%. Even with the way that Visa has aggressively grown their dividend over the years, their payout ratios remained under 20% since 2020 and even gone down over the years. This is absolutely insane, and this just shows how well they grow their free cash flow in business at the end of the day. And we can see Visa's earnings per share payout ratio is currently sitting at 21.72%, so very sustainable on all boards of the spectrum here. So if you're investing for dividend growth and you're afraid that Visa is not going to be able to grow their dividend like this, you may want to look differently. Now, another way that companies can reward shareholders is through share buybacks. This essentially increases your equity in the company over time as the business buys back shares. And we can see Visa has done a remarkable job at buying back shares over the years. This also could be a potential indicator to us shareholders that the management thinks that the stock's price is at fair price or even undervalued to where they're intrinsically valued at. This could be an indicator that they think the stock is undervalued, but once again, you got to do your own due diligence. I will say though, you don't want businesses buying back shares at really high prices. A company that did this that I actually own was Target, but at the end of the day, Visa's done an impeccable job when it comes to the repurchase program, and I expect them to continue doing that. This is even more confirmation of why I love Visa stock so much. With all these qualities of Visa stock, it's no wonder why the stock has been trading at all-time highs recently. At the end of the day though, I think Visa is an insane business, and I know looking at the price chart here, you could say that it's overpriced and you don't want to be buying at all-time highs, but you could have also said the same exact thing in 2014 and 2015 when it had that big price spike. So at the end of the day, Visa is most likely in the future going to continue growing their business, continue growing their earnings, and rewarding you as a shareholder. It's one of the best businesses in the world, and I think just because it's trading at all-time highs doesn't mean that you should be avoiding it in general. Is now the best optimal time to buy this stock? No, probably not. But I think if you're going to be investing for the long term, now is a fine time to be buying Visa stock. Sure, it could crash 20-25%, but that's good news for you because you could buy even more, get your yield on cost up, and get a better total return at the end of the day. But overall, Visa is one of those forever businesses that you want to have in your portfolio as a staple, and right now, it's one of the largest positions in my portfolio, and I want to continue building it. I'd be happy to have it as the largest position. Alright, I want to thank you all so much for making it to the video. If you enjoy the investing software that I use to show you all the data throughout the video, it is dividenddata.com, the best investing software on the market. Use the link in the description. It helps out the channel greatly, and it also is an amazing tool. There's so much stuff you can use on there, and it should return on your investment if it helps you find one good stock. Thank you guys for watching. Check out the Dividend Stocks.Drugs merchandise as well, the best looking merchandise in the game. And of course, thank you for watching, and of Dividend Stocks.Drugs, have a good one.